Google stock is down over 17% as I am recording today's episode. And if we look at it from its 52-week high, the stock is down roughly 24%. Now, in today's episode, I want to take a closer look at why I believe Alphabet, aka Google, is too cheap to ignore. We're going to take a closer look at some recent transcripts from earnings and other tech conferences that Google has been part of. We're going to take a closer look at some amazing charts, some financial numbers, and obviously, we're going to discuss kind of the bearish thesis behind Google or Alphabet right now. And I'm going to try to do my best to kind of explain why I don't believe some of these topics are as crazy, or as bearish as the market might make it seem. So let's take a closer look and start with today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Now, before we get started, let me know in your comments below. Are you buying, selling, holding Google right now? What are your thoughts with are you waiting for some of the stuff to settle with a lot of the macroeconomic environments, a lot of the volatility happening in the market right now? Personally, I'm a person who doesn't like to time the bottom, so I just generally like to buy during kind of the red days, and we've been experiencing a nice amount. So now with Google, why do I believe Google is too cheap to ignore? First, we got to understand the business a little bit more. And during a Morgan Stanley Technology Media conference that happened in early March, the senior VP and CFO mentions that everyone understands that Google has this massive global reach with billions and billions of users. But Alphabet's business is very comprehensive and very large. Obviously, most people talk about them in their search engine, right? That's where the Google search and advertisement segment seems to hit the most. But they did mention that in their last earnings calls, their cloud revenue and their YouTube revenue now has an annualized run rate of over $110 billion a year. Those two are massive size business that people should not kind of ignore. And we'll look at charts in a bit, but also they have a lot of early innovations with their other bets. They're now starting to see Waymo, which is launched this previously in Austin, is kind of expanding the footprint of their autonomous vehicles and kind of robo taxis. And there's a lot of other bets that Google is a part of. So not only do they have a massive lead in search, they have a massive growth in advertisement. They also have other bets, with some of those other bets already kind of providing some solutions and maybe showing a path to future profitability. Now, one of the reasons I'm personally really excited about Google is their Google Cloud. And Google is the third player in the cloud market right now. I think number one is Amazon, followed by Microsoft, followed by Google, right? So Google is much smaller out of the other two, but it is still growing at amazing levels. So Google Cloud in the fourth quarter grew 30% year over year. And one of the main reasons is they have a lot of strong AI deployments. The second thing is they actually would have grown a lot faster from customers, and they didn't have kind of the capacity. So they have more demand right now than supply. And I personally believe that Google can actually build, or Alphabet can actually build their AI infrastructure a lot faster than maybe a Meta, than maybe an Amazon or a Microsoft, because they do have both GPUs and actually strong AI ASIC solutions that they've designed, right? Other players have AI ASIC designs, but no one is as good as the TPUs. And that is, in my opinion, super crucial in this market where demand and supply are currently in an imbalance. Now, all right, so we understand kind of the different aspects of Google or Alphabet. We understand where I'm most bullish, which is kind of their Google market, Google Cloud market. Now, if we look at PE ratios, this is, in my opinion, too cheap to ignore, right? You can see the thumbnail, but PE ratio 19.51. It's probably a little bit lower right now with the volatility. PE ratio forward is 17.48. PE ratio forward 1 year is 15.34. I think this is insane. And in the long term of things, I would be very happy to be adding at these levels. Now, I want to kind of show a pretty quick chart of kind of those two main businesses that Google was previously talking about. We know there are massive massive beast in the advertisement. But here we can see Google Cloud revenue continues to see a nice growth sequentially. The other thing is Google Cloud operating income is also improving sequentially. And this is what I believe we're going to continue to see. And Google Cloud, like I mentioned, is going to be a massive growth opportunity for them as they do have their own AI chip and are going to be able to build more AI infrastructure than some of the other players out there. YouTube ads is also pretty strong. And I mean, I personally watch YouTube more and more every time. And obviously, being a YouTube content creator, I can definitely see the benefits and the improvements that this platform continues to make. Now, if we look at their balance sheet, cash and short term investments, $96 billion, total long term cash of about $11 billion, and free cash flow of around $72 billion. That's after a hefty amount of money being used to build AI servers. This is still a massive free cash flow machine. This is a company that plenty of growth opportunities, amazing balance sheets, and in my opinion, is sitting at super cheap prices. And we're going to talk about why in a bit. But next, what I want to talk about is I talked about their cloud market. The other thing that it's really bullish about Google, in my opinion, is their AI solutions. Many people kind of sleep on Google with the AI solutions because they definitely had kind of a slower head start. I think one of the reasons is this is not a startup like OpenAI. They have billions of users. So when they have to release something, it has to be responsible. They tend to maybe focus more on releasing a finished product opposed to maybe releasing a beta product or something still in the works. That has kind of shifted a little bit, and they're going to, hey, look, we're just releasing something more experimental. And we can see here with Gemini 2.5 Pro experimental to showcase, hey, look, we're still in the works. But now Google and Gemini and Google DeepMind are really showcasing the strength of their AI solutions. They have a lot of AI solutions that are extremely competitive, some even beating OpenAI. So I think their AI market, they have plenty of data sets, plenty of infrastructure. This is a massive opportunity for them. And like I mentioned earlier, right, they do have a lot of AI chips. They create kind of their TPUs. The most updated version is the Trillium, which is their version 6. But they also still use kind of their V5, which are still generally available in certain parts of the United States. Overall, building AI infrastructure is crucial, and Google having a lot of internal solutions, then buying both their own ASIC solutions and designing their own ASIC solutions and buying great solutions from NVIDIA, in my opinion, is going to allow them to explode their market share in the cloud space. Now, those are all the bullish things. I obviously want to take a closer look at some of the bearish scenarios here for Google. So the first bearish thing is right now with the uncertainty in the overall market and macroeconomics, there have been reports that maybe the advertising market is going to see a bit of a slowdown starting here in March of 2025 as economic uncertainties and weakening consumer appetite is driving a slowdown for ads. Now, based on some analysts, this pullback is expected to continue into quarter 2, directly affecting Alphabet's bottom and top line numbers because most of their revenue comes from ad sales, right? So that's a crucial market for them. Now, in my opinion, right, obviously that is extremely possible, but I think as a long-term investor, you shouldn't really. I really don't care too much about it. It's good to understand what's happening, but remember, there's always cycles in the economics, and we always see these cycles happen in the advertising space. Regardless, I believe in the long term of things, Alphabet's advertisement revenue is going to be bigger than it is today when looking at multiple year time frame. The second thing is kind of the AI competition. So I mentioned, right, ChatGPT, they recently discussed they had about 500 million weekly active users after adding that image generation tool. You also see a lot of rivals using Perplexity or kind of the increase of rivalry with Perplexity. I personally have heard a lot of conferences where their CEOs have mentioned, Intel was one, Nvidia was another one, where they've mentioned that they've used Perplexity almost on a daily basis. I'm not going to lie, I use Perplexity almost on a daily basis. I do believe eventually Google will be able to kind of combat a lot of these threats because they have a lot of competition, a lot of technology and data and engineering talent. Many people are sleeping on Google's AI innovations, I actually think they're doing really, really well. The final one, I would say, actually, there's a few more, but one of the biggest ones are kind of the regulatory and legal challenges. There's ongoing antitrust lawsuits initiated by Department of Justice, federal judge ruling that Alphabet maintains a monopoly in online search unlawfully, Department of Justice suggesting that Google should be split up of certain of their aspects, and overall creating a lot of uncertainty for Google. I mean, we just saw a lot about kind of the competition. So maybe a lot of this monopoly, a lot of these reasons to divest are no longer a reason to be bearish on the stock, especially if Google can say, hey, look, we're actually losing market share to ChatGPT and OpenAI. We're actually losing market share to Perplexity. So there's no way that we have this unlawfully monopoly. Maybe they might lose some contracts with companies like Apple, but overall, I believe Google will be great in the long term of things. Now, I think the other two are just market concerns, capital expenditure concerns, right? Company is expected to invest about $75 billion in capital expenditure this year. Again, I believe this is super bullish, and Google could probably build up more AI infrastructure cheaper than an Amazon or a Meta or a Microsoft. The other one is cloud competition. They remain the third largest here, and there was a bit of a slowdown. Remember that slowdown in growth for this quarter four was all because of capacity. But in my opinion, this company is going to be able to build that infrastructure great. So I am very, very bullish on Alphabet.